Thanks for your time, Keith. We're looking today at the construction sector, and more specifically the small cap construction sector. I'd like to start with Esau Frankie. They came out with a trading update not too long ago, and because the company is often the first on site for construction projects, this didn't send a very positive signal into the market about the sector. What did you make of that communication?
Well, the trading update was broadly in line with what we thought. Obviously, it caught the market a little bit. Caught them a bit of surprise because you saw across the board there was a bit of selling of the shares. Generally speaking, it's been a tough trading period for all the construction companies. Esau mentioned the rainfall, and there's been the World Cup during it, which all impacted on operations. This is never going to be a great 6 months.
And CEO Bernie Kroner, as you mentioned, did specifically refer to that World Cup as a stumbling block for the company, as it adversely affected productivity and also delayed the awarding of contracts. Is this encouraging, as we won't see a repeat of that in the coming months?
Well, to a certain extent, I mean, you have to look at it in context. 6 weeks out of 20, what's it, half of 52, 26 weeks was the World Cup. I mean, that's quite an impact on operations. And then, of course, you get the spillover effect. Guys go on holiday before, guys are still on holiday afterwards. So there definitely will be a pickup in the next 6 months, if for nothing else, just for being a World Cup.
Sure. And the company specifically mentioned that the slow awarding of contracts by the government is a stumbling block or a challenge that they're currently facing. The timing of the resumption of government infrastructure spend remains a key factor for the recovery of the local construction sector. What is your sense of when we'll start to see an uptick in that sector?
I think, generally speaking, the government's committed to 3 years. The market seems pessimistic about that if you're looking at the earnings multiples. I think the question is not when, but which departments. Like right now, we're seeing roads. Roads are spending fantastic. Your SANRAL's coming out. Next, it depends on departments, and also depends on the needs coming from the public in respect of those departments. I think if I have to make a call within the next year, you're going to start to see the green shoots spending, which is unfortunately a little bit late. But this was, like I said, this was always going to be a tough 6 months and probably a year for construction.
Sure. And acquisitions consolidated in the prior year by Esau Frankie saw the group expand from purely geotechnical to civil engineering. So they have diversified there slightly. Bernie Kroner also mentioning this week that the geotechnical business has been trimmed. They have taken some staff off their books. So do you believe that this strategy puts the company in a good position when we do see an uptick in activity in the sector?
Absolutely, absolutely. I mean, across the board, these guys are using this as a year of consolidation. You're trimming out the fat, restructuring, putting things in a place where going forward your margins can be a lot better. Okay,
and at R2.54, is this company a steal, or are you still proceeding with caution?
I would proceed with caution.
Really? Okay, moving on to, you mentioned SANRAL and that there is spending in that road construction sector. Rawbex, they have expanded into Africa as well. Is this a company that you are interested or looking closely at?
This is a company I've followed. It's not on my personal coverage, but they're sitting in a very sweet spot now, absorbing all that road spending that's coming out. And that's very inelastic spending, because there's not just road construction, there's road rehabilitation. And then moving into Africa, they're getting good margins from there, but it has to be borne in mind with the slightly higher risk of Africa, and at the same time, the Chinese, lower cost base are coming in, they're starting to compete with them. So it's definitely a company I'm following. It's run very hard. I think the story is positive, and we'll see if they run a bit more.
And lastly, Keith, you are looking at the small cap construction sector. You haven't worked through all of the companies just yet, but are there any companies that are standing out for you? I think
that Sanyati stands out, not necessarily in terms of the business, but in terms of how badly the market has marked them down. They're trading below tangible net asset value. Tangible net asset value. They're essentially priced for bankruptcy, yet the company going forward is going to have minimal to zero debt. They're probably going to, profits are going to be marked down a lot. There's going to be a lot of pressure, but it's still probably going to be profitable. Trading below tangible net asset value, I can find no justifiable reason for that. So it looks to be insignificant value.